Standard & Poor's, Fitch and Moody's, global names acclaimed for providing organizations with passports to the international credit markets. Analysts have said that improving credit rating is now central to growth as the East African economy gears towards globalization.
Ratings provide a very useful tool for communication and to instill confidence as far as the investors are concerned. Ratings in themselves, again, are a measure of transparency. And this in itself then enables the companies and banks to access the capital market. So if you like, you can consider the ratings and this seminar as enabling and helping the companies to access the financial capital markets, the international markets first and foremost, but also it creates a vehicle to access the domestic capital markets as well.
The context is that our economies are ripe for accessing the international capital markets. And the purpose of the seminar is to bring out the issues that issuers in this region need to be aware of in terms of how's the market, what do the investors internationally expect, and what can issuers do to prepare themselves to access those markets.
Globally, there has been a huge appetite in emerging markets for institutions to diversify their funding sources. And already, the East African region is being eyed by international lenders, particularly for funding infrastructure development.
I think as far as East Africa is concerned, bearing in mind that the economies are dynamic, that they're growing, there's a lot of appetite, investor appetite to look at East Africa. So what is needed is communication, the confidence factor. So I think the lessons for the entities in East Africa is to be communicative, to be transparent, and to be aware of risk. And this is what investors are looking for.
Credit rating has become so important that nearly every sovereign state has at least one rating from the 3 leading global rating agencies.
So we have countries rated with your ubiquitous AAA ratings, countries like the US and the United Kingdom and Australia and so on. But we also have ratings of countries that are not highly developed, and those ratings tend to be down on the lower end of the rating scale. But it's important to know that we rate all countries on the same basis. Essentially, we have a methodology that allows us to look at countries by their economic strength, for example, the size of the economy, how diversified it is. We look at countries' institutional strength, which is where oftentimes developing countries tend to be marked down a little bit.
According to the most recent Kenya Gazette publication, domestic borrowing passed the 109.5 billion shillings mark set in the budget by 250 million shillings to meet rising public expenditure needs. Though leading economists believe the country has the capacity to absorb more debt.
Government has been talking about raising funding offshore. And you've also heard that without a rating of government, it's not easy for corporates to raise money offshore in a cost-effective manner. If you bring all that together, government has talked about going offshore. I think it will. I think it will be complementary. I think it will be part of the efforts to raise sufficient capital for our very large infrastructure needs in this country, and it's in that context that it is useful for corporates to understand what these international markets are about, because sooner rather than later they will follow government into those markets.
Analysts say the countries in the East African region need to provide a conducive environment of investment in order to enhance their sovereign ratings.
I think we normally only assign ratings in the cases where we've been asked to assign sovereign ratings or where a government has agreed to cooperate with us, because there are a number of requests for ratings in the private sector. But essentially we feel that only with the richness of the relationship of your being able to discuss decision making with policymakers, of discussing the details of the data with the technocrats, of talking to academics in a country or bankers, et cetera, just to really have a better understanding of the economic environment. It's only in those cases that we feel that we really have the information that is appropriate to assign a sovereign rating.
Moving forward, credit rating will be instrumental in obtaining debt, and policymakers will have to be spot on to enhance the region's debt capacity.